Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights that help boost your trading potential. Coming up on the show, despite a historic pullback in gold, the bigger bull trend may still be intact. We got analysts out there seeing room for fresh record highs later this year. We'll take a closer look in today's technical take. Plus, we're breaking down the charts to see what's next for Bitcoin. And two more big tech earnings are in focus this week. Alphabet and Amazon set to report. We're going to tell you what to expect from both. Plus, our trading debaters who are standing by, they're getting ready to square off on the Google parent company. That's all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. Got half an hour in the trading day under our belt, so check out on the S&P 500. We seem to be fading a little bit. The open seem to have a bit of stability, but we're starting to lose some of that ground. We do have gold and silver rebounding today, oil stabilizing. It's been a pretty dramatic move in some of those key commodities over the past several sessions. So let's jump into the heat map. I want to see what's going on here in terms of the push and pull, why we're not showing a little bit better on the top line. NVIDIA down a little more than 2%. Microsoft is down as well. And Google not putting any points on the table. So we are getting a bit of that push and pull, and some of the tech names aren't showing up. Want to take you into Palantir. We got a pull. Now the shares are starting to come off too. What is going on with the tech trade? A beat on the top and the bottom lines for demand for its artificial intelligence tools. Stock more than doubled last year. It hasn't had a great start to 2026. We had some momentum on the back of these earnings, but sentiment seems to be shifting in the market in real time. Let's check in the PepsiCo as well. They actually came out with a revenue beat for their most recent quarter, but they got some warnings for us. They see a decline in sales volumes going forward. They're also cutting prices. Now, this may not be great for the stock, but my kids like Doritos. The Doritos aren't getting any cheaper. They actually plan on cutting prices of Doritos, some of their other stocks, by up to 15%. So good for the Bonnell household. Not sure about PepsiCo stock. And that's your market update. Want to move to the desk now and check in with our guys, Jason Natick and Hiran Amin from our direct investing team. And yeah, getting ready for another show, boys. We got a lot to talk about. I think you wanted to start with what is going on with gold.
Yeah, let's talk about what's happening with gold. Is it losing a little bit of that preciousness? But today might say otherwise, in fact. We've come off a very tumultuous week is how I would describe it. Probably the wildest week in the markets, in the metals market specifically. And it sure felt that way. I mean, if you're looking at, the question is, what does this really mean for longer term traders with this major pullback that we have? And we've kind of had a flush and we're back up again. But just to recap, we've had the worst day that's gold recorded, I think, in a decade since the 2008 financial crisis. It had that 9% pullback, dramatic pullback on, was it Thursday, overnight Thursday and into Friday. And this was mainly driven by the fact that, a combination of things, but we had dollar weakness leading up to that. The Dixie was trading at 4-year lows, but President Trump had announced a pick for the Fed chair now, Kevin Warsh. Yeah. And the view on the street about Kevin Warsh is he's usually seen as a more hawkish on U.S. monetary policy and being less of a risk to bending to political pressure. Anything more hawkish means it's supportive of the dollar. And the dollar is going to be a key barometer for gold. So if we see dollar strengthening, it means the metals, or gold specifically, is going to be pressured down. But also, we've seen a reversal. Obviously, coming into yesterday, we saw it kind of peak back up, and today it's almost touching back at that resistance, which I'll look in a moment. But some structural, bigger question that's always like investors want to know, is this a fundamental reset or is it just like a positioning shock? And I think what had happened was mainly we talk about volatility increases, but we had margin increases and volatility that was driving it, which flushed out a lot of the froth. Speculative traders, and you're still left with the long-term holders still supporting that price. But also coming into it, this month is key seasonal month for gold because China is going to be celebrating the lunar year, which we should see another surge in demand. Now, keep in mind, the backdrop of the rise in gold has still been central bank buying action, specifically China and India, have been really shoring it up as per, especially with the dollar debasement trade. But let's look at the charts, Greg. Let's see what we are seeing right now. I've marked up some key levels that I think we need to keep an eye on over the next coming weeks. So far the story is still, the narrative is still holding. And I'm going to point to this first, this upper trend line in this white perforated line that I have here. This is the overall bullish trend line that's been mapped over a year. It's still holding. So even with this dramatic pullback, we did have a kind of a parabolic move. It kind of marked this. Anytime you have a steep move like this, we saw it took 8 days for the price to hit this all-time highs at, like, I think it was touching 56, let's call it 5,800 on the futures, I think just under 5,800 on the spot. But what's the saying goes? The bulls take the stairs up and the bears take the escalator or the elevator or jump out of the window. In this case, it was a classic case of jumping out of the window. We saw it reverse down to this 4650 level. We saw it retest the 50-day moving average, which is in blue over here. We've marked it at that 4,500 level. And then it's kind of had a bounce off of that, which is now sitting above that 4650, which is now a support. So the key resistance going is back to the 5,000. Again, we need to breach that level. And if you can cross that, we might be testing closer to the 5,400 as the next level to watch. When you look at the momentum indicators, they're still bullish overall, still supportive. RSI did dip below its usual trend of being in an uptrend, but this is just a reset, and maybe it's for long-term buyers who were on the sides thinking the prices had run up too much. We saw a lot of buying activity and supported with this big bullish candle we saw today.
All right, so that's gold, obviously in the spotlight, and of course, seen as a store of value for millennia. I guess something a little fresher for us in terms of the geologic timeline. Crypto, Bitcoin. I got Bitcoin on my screen at just above $77,000. It's been a big pullback.
Yeah, it's been a bit of pullback, and I was just watching the tennis over the weekend, the Australian Open, and Rafa was in there, and he's known for, whenever he wins a medal, he takes a chomp out of it, and you know what you can take a chomp out of? Gold's equivalent partner, digital currency, Bitcoin, of course. So we've seen it really being a signal. The reason we want to watch it is because it is a really key indicator for risk-on mood, or in this case, risk-off mood, and it's certainly in a risk-off mood. So what we've seen with Bitcoin is that sentiment's really been hit. We've seen a sell-off coming into pretty much start of the fall, right into this year. It's had a dramatic sell-off, actually breaking through key levels. One of the biggest thing is, if you remember the whole crypto market, I wanted to kind of get a sense of how big is the crypto market. The crypto market stands at 2.3 trillion. That is half the size of just Nvidia alone. So we're talking, in the grand scheme of asset classes, it is the smallest player in that space. But Bitcoin specifically accounts for about 1.5 trillion of that valuation there. We did see it actually touch, we were monitoring a key level around that 80,000. It broke below that 80,000, came down to the 75,000 and tagged that. We'll look at that in just a moment. But I just wanted to see, is there anything still supporting it? And the good thing about Bitcoin or crypto is you can look at the blockchain to see what are the whales really doing. And one of the key indicators we looked at was to see if the overall average wallets were increasing in Bitcoin value versus, or not value, but how many Bitcoins stored versus not. And we did find that just recently, ever since November, we've seen the highest level. So this is according to data from BG Geometrics. They found that 1961 wallets that hold between 1,000 to 10,000 Bitcoin last week, and that was an increase from a 2-year low of 1,903. So we bumped up about roughly about 58 wallets having a larger chunk of that Bitcoin sizing up there. And if we go into the charts, we're still seeing that story where we're still in a bearish phase at the moment. We've seen this clear channel still squarely pointing downwards. I'm just going to zoom in a little bit, but before I do that, what I wanted to mark, as we can see, it's also forming a classic longer term pattern over here, which is like a head and shoulders. You have this left shoulder forming, you have this head forming. We want to see if a right shoulder forms, but this is a key indication there's going to be a continuation of a bearish reversal downwards. But looking on a sort of narrower scope, the two levels that I did mark was this plunge we had yesterday. It just kissed the 74,483 level, and this marks the Liberation Day lows. So it's the lowest point that we've hit at this point. We are still in a bullish candle. Today's a red candle. It's still inside this, so it's going to take a bit of volume to get back into this 80 to 84 zone where we might see more demand coming in. But right now, it's still not able to break out of this channel we've got on the lower end and the upper end. So even if it does, we still see resistance sitting in that 85 to 87,000. If you can break clear of it, then we might see some momentum coming back. But the upper head resistance right now, to me, is 92,700 on a best case basis. On a worst case basis, it can still hold support at 74.83. If it doesn't, we're going down to the 66,000 level where that break is. But right now, it is certainly risk-off momentum in the crypto space.
Right, gold and crypto, but we cannot live by those alone. A lot of people can't live without their coffee.
No, we need a little bit of a jolt to get us going in the morning, so I'm going to be looking at Starbucks. So we know Starbucks had their earnings last Thursday, and they're the world's biggest coffee maker in terms of cafes. We're looking to have their price pop, like me taking a double shot of espresso. But in terms, it looks like the
Like you do before every show.
Yeah, absolutely. That's just back there letting it rip.
Let's do this.
But the earnings, I hate to say it, actually came in more like decaf, right? So, but the company's earnings, they were touting growing sales momentum. They had same-store sales actually were positive and actually beat market expectations. They were up 4%. The revenue even jumped, and this all caused the stock to kind of rally right out of the report. But that was short-lived. There was worries of increasing costs. A lot of their goods need to be imported, so there's essential imports from tariffs that are going to be impacting. But their revenue beats turned actually into a 62% decline in profits for Q2, so not good on the bottom line. And there's concerns about their presence in the Chinese market. They had expanded some of the stores, started reopening cafes in the North American market, but nothing in China. So the market didn't react with much exuberance there. But let's kind of jump into the chart so we can take a quick look at what Starbucks is trading. So, hey, the start of 2026 was kind to Starbucks. We see it rallied up, and it actually broke through this $95 resistance level that it kind of had bumping its head on earlier in 2024. Broke through that, but we can see this really large kind of red body. This is a really bearish candle in that it really traded back right and almost instantly below the 95 level, so it wasn't able to hold on to those gains. So we've moved ourselves down with the $90 level, which is kind of in sight. And we can see today's actually we're getting a little pullback in the price where we see a little green on the chart there. So it momentarily has confirmed itself above $90. We'll see if that stays, because we've had lots of crosses in both directions of both moving averages. One thing that I've been kind of trying to track here from this is from a momentum perspective, both from an RSI and a MACD level. We can see down here at the bottom of the chart, we breached out of overbought and have down and continued in some negative sloping, and MACD's kind of confirmed that move. We're still above zero, but the MACD did cross below the signal line, so kind of confirming that downward slope away from kind of higher levels. And we'll see if today's up candle is kind of a one-off, or we're going to be able to again move ourselves back towards 95.
All right, coffee, crypto, and gold. A nice balanced breakfast. Thanks for that, gentlemen. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website, where you can try out the platform risk-free. Open a practice account. You click on the Try TD Active Trader button. Then when you're ready to switch to a live account, simply export your workspace, start trading for real. It's time now for the main event, Trading Debating. This week, the stock in the spotlight is Alphabet, parent company of Google. We best know it for search and ads, but it's also home to YouTube, cloud services, a growing slate of emerging technologies. Before we get going on the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only and should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now back to the stock of the hour, Alphabet. What made us pick this one, guys? Hearing.
As you mentioned, Greg, it's given us great hits like Gmail, Android. I'm a Gmail adopter from day one. YouTube, of course. But I think the bigger theme right now is AI is kind of in focus, is changing everything, and we should probably start with the company that it threatens the most. And it needs it the most as well. So, Google sits at the intersection of AI hype, reality, and also margin anxiety, and that makes it good debate gold.
Absolutely. And when the name of your company has become a verb, I think you've made it at this point in time. And it is the kind of youngest company in the Mag 7, so a good opportunity for us to kind of put our heads together and debate the company.
When you brought that up, I remembered years ago, two jobs ago, I was at the National Wire Service. We were meeting with a client that was not Google/Alphabet, and we're in the room with them. They're in the same business, though. And I said, "Oh, I didn't know that. I'll Google it." And then you look across the room, and the executives are all part of a competitor company, and say, but it became a verb, right?
It became a verb, yeah.
It's synonymous with it.
They understood, but they didn't like it. Okay, let's get some time on the clock. You each get your 2.5 minutes to make your case. the bear and the bull arguments. A little time after that to counter. We draw from a hat as always. And Jason, you are the bull.
I'm the bull guy here. Okay, so let's get rolling with this. So Google combines an enormous, and I'll say that enormously profitable core business, and they're combining that with high growth opportunities. We're talking AI and cloud here, and this is backed with consistent, strong financial delivery, which is giving investors confidence. And this is something that makes them a compelling long-term bull case. I'm going to focus on two quick things here. One is the absolute dominance of their core business, which has absolute gigantic revenue scale. We're thinking about their search business and their ad business. Their searches, so when you're going to be Googling something on their platform, is 90% of web traffic is using that. So that's no small potatoes here. Alphabet is just actually going to be reporting its first $100 billion quarter, with total revenues up 16% year over year. So we've got big numbers with big multipliers. So this is big success, and they're showing strength across the board in all channels: search, YouTube, cloud, as well as kind of that repetitive things, those subscriptions. And then next is their new things that we can't miss it. It's AI. Everybody's talking about AI and cloud, and it's accelerating future growth as we move forward. But Google Cloud continues to expand rapidly. We're talking 34% year over year growth. And here's the nice thing: there's 155 billion of backlog of orders and interest into that. So signaling just really long-term exuberance for what they're putting out. And then meanwhile, their AI, their ecosystem from their AI perspective, we're talking Gemini. We've got huge amounts of adoption across the market. 650 million monthly users is being integrated into search, cloud, ads. We're talking, how do you monetize AI? That's been a conversation. Well, Google's found a way to do that, and they're doing that successfully, and it's turning their company into a multi-pillar tech platform. All right, let's get ourselves into the chart so we can get a gander at kind of the beauty that Google's presenting us. First thing I've got up on the screen, this is a comparison. Mag 7 is what we talk about. It's some people talk about the weight in the S&P 500. Well, guess what? If we're thinking about who's performed the best over the last year, Google is outpacing NVIDIA, number 2 on the board. They're outpacing Tesla, Meta, Amazon, Apple. Google is up almost 67% at rating. It looks like it's tipped a little bit higher as we go forward. But let's move into Google itself and talk about some of the things that have kind of set it out apart. And when we look at kind of, once again, over that 1 year time period, we've gone on quite a run. When things kind of turned around in the summer from some consolidation in terms of prices, we saw some big moves up. Price crossing moving average, triple moving average cross. We've seen multiple gaps in price, which, sometimes we all talk about those gaps filling in, but what was really interesting here is every time we've gone through a gap, there's been periods of consolidation and then return back into the trend of upwards.
I think Jason was feeling pretty good about his bull argument there here. And what does the bear got for us?
Yeah, look, I'm not going to deny it, but Google's a great company. But great companies can be terrible stocks at the wrong price, the wrong cycle, and the wrong threats, and that's what I'm going to tell you. And also, in an ultimate savage move, I asked Gemini, tell me some bearish points about Google. So here's what we're going to share together when great minds come together. So let's talk about the search mode, because that's their biggest Achilles heel right now. AI search mode is cracking. And AI is going to be the sledgehammer that's going to do that. When you think about Google, 85 to 90% of their revenue comes from the Google Services segment, which is mainly built on its vast across services, but it monetizes it through ads. Now, when users stop clicking, advertisers stop paying, because here's what's happened. What's the most annoying thing when you go onto a page to read? You get all these ads littered everywhere, you got to scroll. No one wants to do that, so you go to AI, where it just streamlines everything for you. But Google has built its business on clicks, on queries, links, and ads. So if you're giving answers but not clicks, then how are they going to monetize that? And they haven't figured that out. So that's one thing that you have to look at. And what this means is advertisers or companies pay Google to direct traffic to their websites. And if you're not directing traffic, you could also be on the other side of a lawsuit or regulatory concerns. AI is also the other thing to consider. So they're going to be attacked on the AI front from players like ChatGPT, Perplexity, Copilot. They can compress a 10-link search page into one answer, and they can do it better than what Gemini can do it. At least ChatGPT, and I will refer to that based on widely accepted unanimous decisions. The other thing is, the way I basically can Google search business is they're selling billboards on the busiest highway in the digital world, and AI just built a teleportation device. No highway, no billboards. That's all you need. So here's what you have. Then let's talk about the massive CapEx that they have with a guaranteed ROI. Structurally, when you have free cash flow pressures with so much CapEx, that leaves very little room for AI monetization. Their data center costs are soaring 41% up this year, and the CFO came out and said themselves it's going to get worse in Q4. AI spending is predicted in the 95 to 93 billion range in 2025. And it's coming in at about probably 114 billion for 2026. Now let's actually look at the charts real quick, because here's what I wanted to show with Google. Similar story to Jay. It's in an uptrend, no denying that, but every time it's hit this upper trend, it's been rejected off. And most recently we saw as it came off here, it went sideways and rejected. And guess where we're back up? We're back at this upper trend on this key resistance zone.
Okay, there is time to counter. You both ran out of time in your official
Did.
debate things, but just go crazy now. Go crazy.
Yeah, so Google itself, or Alphabet, whatever we decide we want to call them, their strong financial results have been evident, and this is not just coming from them, but it's also from analysts out there in the market. There's big expectations for the earnings per share to continue to have double-digit multiples. Earnings per share up 15%, 23% year over year. And one of the nice things here is that we're moving off of just search and ad-based revenue. Google actually just announced a deal with AI company Anthropic. So it's going to be coming up. We're talking multi-billion dollars for them to be providing the hardware. So we're now diversifying into the AI space a little bit in a little bit different mode here. But it's one of those things that it's.
So they're providing what? GPUs or TPUs?
TPUs.
Okay.
Yeah.
Jay, you mentioned something to me interesting in the long. What was the backlog number? Remind me again.
155 billion.
Okay, 155 billion.
Lots of
Who's their
zeros.
biggest threat? Yeah, Microsoft and AWS. So when you have a backlog that big, it sounds great because it's in waiting, but what does that mean? These competitors, AI moves so fast, they don't have the patience to wait around for years before you can deliver GPUs or TPUs, because that's going to just prevent them from building out their roadmap. The other bigger thing to really consider is going back to the search business again, which you said they're trying to diversify. When you look at the cloud competition business, AWS and Azure, it's an arms race. It's the fiercest arms race, and they trail AWS and Azure in scale. So it's like, cloud is in a knife fight, and Google just showed up late when it came to it. But the other thing that I think we should mention, that's probably the biggest thing when you think about the Max 7s, and you pointed out it's had the greatest outperformance. If I were to think about a litany of lawsuits and regulatory things, and I think about the Max 7, one name only springs to mind, and that's Google. They are littered with it to a point where I was like, these guys don't just need legal counsel. They need an entire legal firm just working on all the different lawsuits and regulatory things that they got to create. Let's talk about
being successful is everybody's trying to jump
but
on
when
you a
you
little
got
bit.
billions going after you, you fine them $3.5 billion. This is the fourth fine that Google's had from the EU. They've for monetizing and creating a monopoly in search and directing their traffic there. But even on the US, US is seen right now to protect some of these companies, but the DOJ has just been after looking for blood out on Google. And just the recent ruling found that it was illegally monopolizing the search market and colluding with Apple, in fact, which it recently struck a deal with.
So it's not just the search market where Google is expressing dominance, right? 90% there, but we're talking about hardware, right? Android is 74% of the market space. Chrome, 70%. So they've got the influx of what's important to all these companies is data, so they can understand it, so they can target, so they can use AI to specifically get their message and those dollars. Because Google is so entrenched in ad spend now that it's almost a must-have. But also going back to your talk about capex and money spent. Yeah, they do have a big capex spend, but AI is actually already profitable for Google at this point in time. Their cloud segments are pulling off. They brought in over $15 billion in revenue and $59 billion in net income. So we've got money coming in from other spots. Not just money, lots of stuff.
Hearing so badly wanted to add something.
I was like, I didn't respond to that.
I had to run out the clock, I guess.
Rest on our laurels on that
You
one.
both have a chance to talk a little bit more, and you have been sneaky in the past when you went into your trades, so we'll see what other pepper in there. Talk to us about possible option trades here on the bull side.
Okay, so what we're thinking about here is the trade that I'm proposing as a possibility here is a bull put spread. This is a credit put spread. So this is one of those trades where if we've identified kind of a zone where a stock has been trading in, we can make money in all three directions. If the stock trades up, if it moves sideways, or moves down, just not down by too much, there's an opportunity to be profitable in this particular situation. Let's go ahead and let me bring up the trade on the charts, and we can talk through that a little further. Let me back up my time frame here. Sorry, everybody, and then move it in a little bit here. Oh, where are we at here? Let me take off my chart here. Sorry.
Oh, what's that squiggly mouse?
That's a squiggly mouse. All right, so what we've got going on here is if we've identified a zone in that 310 to 340 range over the last number of 3 months where the stock has kind of traded in. So if we can look to sell puts outside of the range, so they're very low probability of being assigned here. So what I've marked on the chart when I did the write-up, we were talking these were like 89% probability expiring out of the money, which is a good news story for this particular trade because you're making max gain on the trade. Any credit you take in will be the most you can make. So we're selling puts with a low probability of being assigned outside of the standard range, outside of the expected move, but we can go ahead and purchase a lower, further out of the money put to act as insurance to also give us a stopgap in case things do. We get larger than expected moves or there's bigger changes kind of in the broader market, that if it does drop below that 295, that we're not giving back, we're not opening ourselves up to much more substantial risk. So in this particular case, we've chosen a 305 put to sell, buying the 295. We're taking on a little bit more time out to the first week of March. I know earnings is coming up this week, but we take on a little bit more time. Maybe we get a little bit back more premium. But then also in case we're selling, the choice to sell was kind of strategic because we're selling options into higher volatility environments and hopefully going to capitalize when the volatility comes out after earnings, and then we'll be able to buy back for less money, even if we're not getting price movements. So that's particular case. Max gain, as they said on this trade, is the credit taking in. And right now, it's about $1.10 per contract, or $110 per contract that we do on this particular trade. I know the risk coming back is what we do when we're focusing on that. The risk on any credit spread trade is going to be the width of that spread less the premium you took in. So we've got $10 here, taking back in like $1.10. So the risk would be $8.90 per share, $890. It seems like a lot of risk, but the reason I was comfortable taking on or proposing that this here was because the probabilities, right? As I mentioned earlier, 89% probability. We're a ways out of the money and a ways out of the trend. So you can, taking in a little bit less credit, but assuming less risk along the way.
Interesting strategy there. The bear side, how could a bear play it?
Yeah, so looking at the charts, Greg, I mean, we've seen, like, certainly if the story plays out the way it has so far in the past, every time it comes to this upper channel and rejects off, we expect to push down. And the lower channel could test potentially, you're looking at the 50-day moving average. It's really been respecting the 50-day moving average, which is pulling back into the 316. But it is a catalyst earnings period, which we could see more of a dramatic pull into a key support area. Also, remember, when you think about a valuation point, this is now trading at a premium. Talk about a year ago, it wasn't. But across all multiples, PE, forward PE, and price to sales, it's all trading at a multiple. So it really is a price to perfection story. If that breaks down, we could see a sizable move. So one way you could do it, and we're gonna just juxtapose the trade that Jay put on by putting on what's known as a bear put spread trade. So what we're essentially doing and how we're thinking about this is, one, we do expect a move to happen. Looking at the sort of implied volatility sort of profile coming into this earnings, it is sitting in the 35th percentile, which is usually low. Anything more than 50, I'd want to see, like, maybe that's more conducive to being a seller of premium. But in this case, we're going to be a buyer of premium. The expected move based on the options pricing coming into this earnings week is about a $20 move to the upside or to the downside. But we are going to be playing a further out trade, and we're looking to see if it can start moving meaningfully down and break. We want to look to see if it can crack that below that 50, then it could come down and possibly test down to its 150-day moving average, which I've got mapped out. So one strategy you could put on is buying the 300 strike put, which is we're going out to the April cycle over here, just before the next earnings that they'll have. And we want to map it out to buy or sell the 275 strike put further down. So this is creating a $25 width spread. It is, because it's so far out of the money, it is cheap, but we also need a big move to happen for it to be profitable for us. So it is right now the net debit trade on this, and I'm just going to roll it up if I can, sneak it up. It's $3.25. So in other words, for one contract, we're paying $325 to put this on, which gives our break even that $296.75. So we need Google to at least come down to this price before we start being profitable on this trade. And now,
risk and rewards.
The big reveal, the risk and reward. So let's talk about max profit. So it's a directional trade. We need it to fall, and we need it to get down to a lower strike at 275. That's when we realize a max profit. Simply way to calculate is you take your width, which in this case the spread would be worth $25, minus what we paid to put in this trade, and works out to $21.75 as our profit, or $2,175 on a single contract. The loss is if it doesn't happen. If it stays kind of pat where it is or stays above our long strike price of 300, then we're going to be out the 300 and change that we put onto this trade. That's all we stand to lose.
All right, interesting possible strategies there for our audience. Thanks for laying out the bull and the bear cases for Alphabet. And just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Before we move on, Jason, you're going to show us how to draw some trend lines.
Yeah, we're going to take us through a quick impromptu course right on the charts. Well, let's jump right in here. We get right to the action. So your drawing tools on the charts here in Active Trader, you can either choose the drawing tool at the top. We've got them conveniently listed for you over here on the left-hand side. You can either pick from the graphic on the left, or if you want a bit more information, you can expand it using the chevrons at the top. Just going to really show off two really quick tools that Hieron and I both use on a very regular basis on the show and in our own lives here. I'm going to first draw a trend line. If we start here, just going to, after I've activated it from the left-hand side, we can click on the chart to drag it up. I know I haven't shown anybody anything groundbreaking yet, but it's really the customization, I think, that sets this apart. After I've drawn the trend line, you may have noticed there's a quick editing button that comes up here. And it's not just colors that you can change. So we can go ahead and maybe hot pink is what we're feeling today. You can go ahead and change the the thicknesses and make this a dotted line. But really, what kind of helps me do some of my analysis, if I get into the gear, which allows me to edit some of the specific settings of the trend line, there's lots of different ways for me to kind of make this trend line my own. I can scroll down, get some more information. I can extend it out to the left and right, but I can actually add some data to the chart. So I can either show, let's go show change. One of the things I like to do is show the angle. So if I'm looking to duplicate this to see if there's been some repetition as we move forward, is I can go show the angle. So I can go, now it gives me that data right on the chart itself. The last thing I'm going to show is just quick, and this is a tool that we've identified, saves us time. If you're doing something a little bit more, like a more complex drawing, like let's say like a double bottom or a head and shoulders, is using the pathway tool. On the left-hand side, the pathway can be found over here. Clicking on that, it allows me, let's just draw in like a very rough double top or double bottom in this particular case. If I wanted to deal with that with trend lines, I could do that, and you're not wrong, but it's going to take me 4 different lines to do that. So this way I was able to click and drag or click and move my mouse and draw the more complicated patterns right on the chart. So it's a nice time saver, and I can still do all that fancy editing that I did with the trend line in the pathway as well.
Another powerful tool on the platform. Thanks for that, Jay. And if you at home have a question about the TD Active Trader platform, or if there's a stock you want to see these two guys go head-to-head on, just send us an email at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. If you scroll down, you're going to find a tab that says Join a Live Masterclass this Wednesday at 2 p.m. Caitlin Cormier is hosting an interactive session about TD Active Trader. It's going to explore all the main features the platform has to offer. Registration is open now. Okay, before we wrap up the program, I want to hear what's on the radar for the rest of the trading weekend. I'm gonna start something on my radar right at this very moment. Walmart. It's been a little bump in the price today, and actually now with this rally in the shares, its market cap has passed $1 trillion. For the first time in Walmart. Now it's breathing the rarefied air of the big tech names. So I just wanted to throw that out there. Walmart, $1 trillion market. $1 trillion ain't what it used to be.
Fitting, and it's living up to its name. It's in the NASDAQ, isn't it, Greg? It's a tech company, essentially. So
it's a tech company, and it's joined the other tech companies. But that's of the moment. We got a few things coming up later in the week on the radar. What are you looking at here?
Yeah, so I think key for this week for investors is obviously corporate earnings. Again, we're in the real thick of it. We've got some big ones headlining, obviously, what we debated today, and Jay will mention the other ones. But also, Fed officials are making the rounds again. There's remarks going to be coming out this week, and we're supposed to be, treated to a slew of U.S. labor market data, but it does not include the NFP, the non-farm payrolls. That won't be amongst them.
The government shutdown.
Yeah, government shutdown from what I heard. You just had one of those. This one's supposed to be short-lived.
It was Groundhog Day yesterday, right?
Yeah, it could have been. From what I hear from the grapevine, the House of Reps were on a 2-week sort of hiatus or so. And as the Constitution goes, they must also vote to approve the final versions of the deal. So I believe they're going to be ironing that out today. So the shutdown is expected to be short. It's not affecting a lot of them, but it is affecting the Bureau of Labor Statistics. But other than that, this report is going to be key when it does come out, the NFP, because what's different is, one, is expectations for this report forecast is about 70 to 80,000 job increases for January, slightly up from December, which was a gain of 50,000. But the key they'll also contain revised numbers for 2025, the monthly figures and the annual job growth. So we'll see how much is really deviated from what we were teased out in previously in 2025. But to just keep the juices wet, ADP employment number will come on Wednesday morning, and you got the ISM numbers, which is going to give us some, clues into employment indexes within the manufacturing services sector on the calendar. But apart, we're talking about earnings, and one of the ones I wanted to do was talk about this, the AI space. One of the layers we talk about in the AI in the 5-layer cake is energy at the bottom, and this is one of the energy players, and this one specifically is called Bloom Energy. It's a clean energy technology company that designs, manufactures, and deploys, through some alchemy, creates gas into electricity. And that's what their flagship product is known as Bloom Energy Server. And so really their big case to come into this is they believe that most data centers that really want to generate their own power rather than being on the grid, and that's what they essentially build. They have earnings Thursday after the close. EPS is about 31 cents. That'll mark 11% year-over-year growth, and revenue of 648.5 million. This is a large cap company. It's made some good headway. So the street is really, they're in positive territory earnings wise as well. They just had a record breaking deal. So I'm sure investors want to hear from American Electric Power. These are the biggest players in Ohio and the Midwest region in terms of territory, and so they powered up with them to provide, potentially data center supply using fuel cells. Now, the one big thing I just wanted to mention, the big gap and why the big story is that'll be most closely watched with Bloom Energy is when you think about the grid lag of building high voltage lines, it takes roughly about 5 to 7 years. When you talk about data centers, most companies can build a shell and fill it with servers in about 18 months. So you have a 4-year gap where tech giants have servers, but they have no power. And that's been the biggest hang in the AI space for North America. So we'll see what Bloom Energy has to say about that and what they expect in the roadmap or looking ahead. But coming to this earnings, they've had a storied run so far, very strong bullish trend that's coming off. This white line, perforated line, is the long-term bull trend. We did have a little bit of a clawback coming to the end of the year, which is healthy. Counter trend's always healthy on a longer bullish run. We've resumed it back again, and as of today's price action, we're back above that price level. Coming into this earnings, the expected move is going to be either, let's just call it $30 on the top side or the bottom side. So that means we're possibly going to tag into that 190 to 200 range. On the downside, we are looking to break that support of 135, and if we do break it, maybe it'll test the 125 to 120 range over here. Price has been squarely above its moving averages, especially just recently. We saw the short-term moving average, the 21-day in yellow, cross over the 50-day moving average over here in blue. So it is squarely, momentum is shifting. We've seen volume. But also, when we talk about momentum, RSI, which is making new higher highs, and the MACD is also making new higher highs, we're seeing that confirm as the prices are going higher. So it's not just the price being bid, but it's being bid up with the momentum as well. There's a follow-through coming up, which is validating the strength coming into this earnings on Thursday.
All right, so we'll be checking out Bloom Energy later in the week, and you'll be checking out Amazon.
Amazon, you may have heard of it from the Mag 7 we were talking earlier, but simply put, the market is looking for a beat on both the top and bottom line. With revenues in Q4 expected to cross the $200 billion mark, up to $211 billion or 13% year-over-year. But the devil is going to be in the details. Now, smarter people than me will have the answers. I've just got a bunch of questions that I'm looking for at this particular time.
That's my job. I just got a bunch of questions.
Yeah, exactly. Let's pose them to the world here. But will AWS be able to achieve its 20% revenue growth and continue to expand their margins? Can the ad business continue its rapid revenue growth? And what are the forward-looking guidance for the e-commerce space from an Amazon perspective? And these are all in focus, especially because there's ongoing kind of efficiency elements or efficiency projects in Amazon itself. You may have noticed the 16,000 trimming of the workspace that came out last week, and we want to hear about what the elephant in the room is, that AI and CapEx spend. What's that looking for, and are they going to be speeding up or slowing down? So those are things. But one thing I can answer is looking at the charts. We can speak to what we're seeing here. We can see that they've been on quite a run over the last little bit. We're talking up, nearly 50% over the last year here. There is a definitive support around 233 that we broke through on last earnings. There was a big gap up crashing through that, but within a week the price had returned back and crashed back down through. But that longer term kind of broader uptrend was held, and we actually emerged into actually successive kind of symmetrical triangles that you can see on the chart here. We breached up above the initial triangle after we came down off earnings and kind of rose into a secondary one here. That trend is kind of narrowing as we kind of work ourselves into earnings. 248 to 250, that kind of resistance zone on the top end is kind of where we're looking. It's bounced its head up a couple times. And otherwise, if we don't get the information or those answers to those questions that I was asking, looking to see if that longer term trend line continues to hold. But big week ahead for Amazon.
All right, that's great stuff to look ahead to until we meet again next week. Guys, thanks as always.
Pleasure, Craig.
That is the Tuesday show. We will be back on Thursday. We got Slate Stone Wealth's Chief Market Strategist, Kenny Polcari. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching the program.